You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Uber's latest earnings report has left investors uneasy, with the company missing profit expectations and issuing a cautious forecast for the holiday quarter. Despite showing strong growth in ride and delivery demand, legal costs and regulatory issues have taken a noticeable toll on its bottom line. For the third quarter, Uber reported an operating income of $1.11 billion, falling short of analysts' expectations of $1.61 billion. The shortfall was attributed to ongoing legal and regulatory matters, though the company did not disclose specific details. This disappointment sent Uber's stock down nearly 9% in pre-market trading, a sharp contrast to the more than 60% gain it has enjoyed earlier this year. Uber CEO Dara Khosrowshahi highlighted that customer engagement through the company's membership program, Uber One, continues to grow. This program encourages users to combine multiple Uber services, like ride-hailing, food, and grocery deliveries, resulting in higher customer retention and spending. In fact, people who use more than one service tend to spend 3 times more than others and have a 35% higher retention rate. Revenue-wise, Uber performed well. The company posted $13.47 billion in revenue for the quarter, slightly above the projected $13.28 billion, representing a 20% year-over-year increase. The delivery segment was a major driver, soaring 29%, while mobility revenue, that is the core rides business, climbed 20%. However, the freight division remained flat, continuing to face headwinds from a weak global shipping environment. Looking ahead, Uber has forecast its adjusted core profit for the current quarter to be between $2.41 billion and $2.51 billion, a touch below market expectations of $2.48 billion. It also expects gross bookings, the total value of all rides, deliveries, and other services, to reach between $52.25 billion and $53.75 billion, just slightly above analyst forecasts. Interestingly, Uber also announced a shift in how it reports future results. Starting next year, the company plans to replace its traditional adjusted EBITDA metric with adjusted profit forecasts, aligning itself with more mature and established firms. Even with a strong year of revenue growth and rising bookings, investor sentiment has cooled, largely due to the uncertainty around those legal costs and the slightly weaker holiday guidance. Still, Uber's long-term strategy, focusing on cross-platform customer engagement through Uber One, shows promise for sustained growth. In short, while the numbers paint a mixed picture, Uber remains in an expansion phase, balancing strong business momentum with the challenges of managing its complex legal landscape and market expectations. Stay subscribed for more videos.